I'm definitely not going to tell you exactly what you need to do or what you should do, because honestly, it's up to you. It's your decision. But I am going to talk about the basics of what I've learned over the years when it comes to paying yourself as an entrepreneur, because there are some good nuggets in there.
You an entrepreneur, I got what you need.
Hey there, my loves. Welcome back to CPTV. I am CP, and you are in the place for aspiring and growing entrepreneurs who want to turn their passions into businesses and their businesses into freedom. If that sounds good to you, then go ahead and subscribe, because you are going to want to be here every single Tuesday as I give you the training on the step-by-step business processes that you can implement immediately into your business and your life, so you can get to that level of entrepreneurial freedom that you so deserve and desire. So, you heard me. Go ahead, hit that subscribe button and click that bell so you don't miss any of it. And of course, if you like it, give a girl some love, smash that like button, and tell me exactly what you think and need and want in the comments below. So, entrepreneurs be like, can I pay myself? Well, yeah, I want to pay myself. How do I know how to pay myself? How much should I pay myself? Hell, how much can I pay myself? I get it. After all, you did not jump off the cliff and start your own business to not make any money. But the question still remains. How do you pay yourself as the business owner? You want to know the answer? Then keep watching and let's get to work. So, let me start by saying this very loudly and clearly. I am not an accountant, nor do I work with the IRS, but I am an entrepreneur and have been paying myself as an entrepreneur since my very first business, usually under the guidance of my accountant. So, I've learned a lot, and I'm going to share what I do know with you today to give you some insight and offer some clarity around your decision of how to pay yourself, because I get the question all the time. But I'm definitely not going to tell you exactly what you need to do or what you should do, because honestly, it's up to you. It's your decision. But I am going to talk about the basics of what I've learned over the years when it comes to paying yourself as an entrepreneur, because there are some good nuggets in there. So first things first, you have to understand that there's typically two ways to pay yourself as a business owner. You can pay yourself a salary, or you can take an owner's draw. Now let's talk a little bit about the differences between the two, because you will have to figure out which is the right choice for your business. And there are a lot of things that you need to consider when making that decision. I've done it both ways, and they both come with some good and bad. So first, you need to understand what each way actually is. All right. So an owner's draw means that you're going to take money out of your business for personal use. You can do this regularly, or you can do it as needed. And there are certain business structures that tie to owner's draws versus the second way, which is a salary. But I'll get more into that shortly. If you pay yourself with a salary, that means you have determined a set amount of money that you're going to pay yourself at a certain frequency, usually through a payroll service of some kind, whether it's every 2 weeks or twice per month or once per month. And then you're going to ultimately cut a paycheck to yourself as a W-2 employee every payroll period through payroll. All right. So both of these ways of paying yourself are very acceptable, but there are a few things that will impact your ultimate decision. And one of the biggest is the number 2 thing that you need to understand. That is your business classification. Basically, how did you set your business up when you registered it? Okay. Are you a C Corp or an S Corp or an LLC or a partnership or even a sole proprietorship? And I mention all of those classifications because you probably fall into one of those main types of entities. And it does matter because different entities and different business structures have different rules for how you can pay yourself as the business owner. And those rules typically come from the IRS. Dun, 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 dun. Again, let me go ahead and put my disclaimer up. You got that? Okay. And with that being reiterated, here's what I've learned so far. If you are a sole proprietor, you are simply considered self-employed and you're not an employee of your sole proprietorship. So you can't really pay yourself a salary. Therefore, an owner's draw is going to be most likely how you pay yourself. Okay? If you're a partnership, you can't be paid a salary. So you'll typically be looking at an owner's draw, but you could potentially be paid a guaranteed payment for services rendered to the partnership, if you're doing some work. And that gets a little bit more complicated. So definitely consult your tax advisor. But generally, remember, if it's a partnership, you're going to pay yourself as owner's draws, you and your partners. All right? Now, if you're a C Corp, you must pay yourself a salary based upon reasonable compensation, but you can also receive a dividend or a distribution of your company's profits in the end, okay? And then there's the S Corp. If you're an S Corp or you've registered with the IRS to have your LLC taxed as an S Corp, then you will pay yourself a salary and then also potentially some distributions of profits at the end. So let me break this down and walk you through what this has looked like for me on my entrepreneurial journey. All right. So I've been a sole proprietorship and I was just ultimately using money that was coming into my business, which I didn't really realize was a business, and just paying myself and keeping some money out for expenses. Now, how much to pay yourself is something that I'm going to talk about in a whole separate video. So make sure that you click the notification button because that's coming up next week. But my sole proprietorship was pretty easy. Everything that I made and I took out was pretty much an owner's draw. And that's because my sole proprietorship revenue is automatically reported on my own personal income taxes. So after my sole proprietorship, when I learned that a sole proprietorship ain't the way to go, boo, okay? I mean, ultimately, that's just not where you want to end up. But after my sole proprietorship, I created my LLCs. And my LLC was a one member or a single member LLC. So it wasn't a partnership. So at that point, I had the option to pay myself an owner's draw. Or I could have converted or registered my LLC for tax purposes as an S Corp. And eventually, that's exactly what I decided to do. And let me explain to you why. So I started off as an LLC, which meant that revenue, profits, all of those things are reported on my personal income taxes, which ultimately can change my tax bracket for the good or for the bad. If my LLC doesn't make any profit and actually takes losses and it's on my personal income tax, then I'm going to show less income, which means I'm going to pay less taxes. But when my LLC got to a point where it was really profitable, that profit was also reported on my personal income taxes, which increased my income and put me in a whole different tax bracket. And that was when my accountant took me to the side, which is why it's important to work with a good accountant, and said, girl, we have got to make some decisions here, okay? You are getting killed in self-employment taxes and different tax brackets because of the profits of your business. So let's start talking about what an S Corp would look like. I was scared. I was stressed. But there was a point in my LLC's lifespan where I needed to convert it to an S Corp because I needed to only be paying taxes on income that was coming into me as a salary, which kind of changes even how the company has taxed itself. There's so many tax advantages to the S Corp conversion. But I didn't do that until I got to a point where I was making so much money in my business that I could afford to pay myself a real consecutive salary, because you can't just say, all right, I'm gonna pay myself $500 a month to make sure that I'm an S Corp, because you have to pay yourself a salary that is considered to be reasonable by the IRS. So I think the very first salary that I chose was like $36,000 or something. And it was funny because even to this day, sometimes people say, well, how much do you make? I say, I only make $36,000 a year. But that was reasonable, right, for my business and where it was, because if I'm an S Corp, I'm actually paying myself as a W-2 employee, which means my taxes are being withheld and sent in for me. And my business is also paying a portion of my taxes. So for that amount of salary, I didn't pay that extra self-employment tax. And I was able to adjust my salary in order to make my profits or my revenues and different things like that look differently so I could be taxed differently. And that was when the change really happened for me. So I explain that to you because I started as an LLC, My great accountant said, girl, we getting killed. And it was time for me to register my LLC and convert it to an S Corp for IRS purposes. Now, when you become an S Corp, you are required to pay yourself as an owner through a salary, which means you become a W-2 employee for your business. You set what your salary can be based on what you can afford and what's reasonable, remember, and also what's going to have the most impact for you from a tax perspective. And then you put yourself on payroll and you get your paycheck every 2 weeks. Now, you can also incorporate things in there like bonuses or commissions or whatever, because you're now an employee of your business. And when I converted my first LLC to an S Corp, we were well in the multiple six-figure range and mark. And I said, at this point, I got to pay myself a salary. And it was scary, but it was amazing because instantly my tax bill changed. Hallelujah. It changed, y'all. And it was a very important decision. But I tell you my story to let you know, if you are an LLC and you've thought about doing things like paying yourself a salary because you're at that point, then you might really want to look into an S Corp status because you're going to get different tax advantages for that. Now, I've also had a partnership as a business, and in that business, we are only allowed to take owner's draws, which that owner's draw is all based off of distributions and profits, and it gets a little bit more complicated. So again, I'm not going to get into that, but I do have a partnership, so I couldn't put myself on salary. Now, it's an LLC partnership, which complicates things a little bit more, which means we could ultimately convert to an S Corp for IRS purposes, but at that point, we wouldn't necessarily be a partnership. So I'm not going to get into all of that again. But I experienced the partnership, the sole proprietorship, and the S Corp and the regular LLC compensation structure for myself. C Corp, I've not really dived into. I don't have a C Corp. There's some weird double taxation thing that they talk about in there. I don't even know really what that means, y'all, but I'm just saying double and taxation in the same phrase mean I don't want to do it. Okay. So I wanted to make sure that I could address it because I get the question a lot from those of you out there. 2 questions. How do I pay myself as an entrepreneur? And how much should I pay myself as an entrepreneur? And that's why I wanted to make sure that we could have this conversation and I could share with you what my experiences have been. So now that I've shared with you kind of what my journey has looked like, the question is probably still looming for you. CP, what should I do, right? How should I pay myself? And I'm going to go back to where I told you before. I can't really tell you what to do because as I've explained, it really does depend on so many different factors. How much money you're making, your taxes, all that stuff. But I can tell you exactly what I did and the steps I took in order to make the right decision. And now this, where you are in your journey and the timing of that does really matter too. So step number 1. Keep a close eye on your business financials. Yes, in order to truly make the decision, you have to know where your business stands with regards to profit and loss and equity. And you can't really decide if an owner's draw or a salary is the best fit if you don't really know how much money you're making, how much profit you're making, or what you actually have available to even pay yourself, right? You can't determine how to pay yourself, let alone how much to pay yourself if you don't know your numbers. Step number 2, do your research. Educate yourself on what all of this means. You have to be clear, even before you reach out for professional help. Trust me, if you don't know, you can't have a partner in making the decisions. You will just be expecting the accountant to tell you what to do. And I know sometimes we're looking for someone to tell us exactly what to do, but do you really want that when it comes to your money, honey? Boo. No. Do you really want someone else who is not intimately involved with your dream or your vision or your future goals to be making the decision on how you compensate yourself or how much you should compensate yourself? That is an employee mentality, my love. Letting someone else dictate your pay, but you are the CEO boss. So learn what you need to learn to finally be able to make the decisions yourself. I believe that you should be well informed before making the decision, and that includes doing research on your own, having a thorough knowledge and understanding of what you are up against, but also activating step number 3. which is consult with and discuss everything with a good small business accountant. Now, a good accountant is going to tell you, based upon your business structure and the tax implications or the tax advantages, which way you should be leaning. They'll give you some additional insight into making good decisions financially for your business and for yourself. Don't just wing it here, okay? Talk about what you have learned and what you want with that professional. And then let them tell you if that's possible and that decision and what it might mean for you if you make it. But you already are doing good, boo, because you are watching this video right now. So you're learning. So good job, boo. So proud of you. Now, how much should you pay yourself? Oh, okay, give me 1 second. You know what, guys? We are going to have to pick up this next week so we can discuss this tea on how much you should pay yourself. So make sure you subscribe and that you hit that notification bell so you don't miss it. And make sure you smash that like button. If you've got questions, I'll be right there. Let me know in the comments below. And until next time, my love, when we talk about how much to pay yourself, stay safe. Bye-bye.